This is London with Bitcoin Spike, and to go over the details, huge day in terms of the move to the upside. We caught the bull flag, number one trade group. Guys, it's London with Bitcoin Spike. How could we not catch the spike? In terms of the technicals, we're going to go over a specific formation that we hit again, back-to-back days. Guys, shout out to the VIP number one trade group. If you're not a member of a trade group or you already are somewhere else, we invite you to join our trade group because we are the best. Top shelf. This is London, former hedge fund owner, private non-SEC, not financial advice. Going through the details, I want to talk about a bell pattern formation today. I want to talk about some capital allocation strategy when you're dealing with volatility. What should your favorite patterns be, right? What should your favorite patterns be if you're a disciplined trader? Shout out, guys. Let's go ahead and let me get this to the back. In terms of this, let's let the VIP know in the back that we're streaming. We've had some complications with notifications. I want you guys to let me know. Hit the like button. I would appreciate that if you're here. And live stream. I'm going to put that in the back in our VIP chat, our dedicated VIP chat. I also want to talk to you briefly about the number one, guys, it's not a paid promotion, the number one day trading cell phone. What is it? It's the Samsung Fold. I have to tell you guys, I have it for purposes of charts. I want to make sure you look at it, at least online or otherwise. Looking at the ability for you on a Samsung Fold to open your trading view charts, boom, wide, guys, double wide. If you need to, you can close the phone. I just want to show VIP since you guys have it, and I think another VIP has it as well, new VIP. You can close it as well, use it like a normal phone, or boom, you've got your charts wherever you're at. Wide, loud and proud, guys. Very important. Wanted to show you guys, hey, it's the top phone for day traders. That's how we roll. Now, in terms of the pattern formation, I was excited today because, guys, it's like we've had, two bites at the apple. We've had two beautiful back-to-back days. What have they hinged around? This same pattern. Shout out to the day traders who know this pattern. And I have the bell formation on the right. You're like, what is this bell on the right-hand side? I want to go over. Why do we say we rock the bells? Pay attention. These are big momentum trades. Look at the left-hand side of your screen. I want you guys to focus on this bell formation, guys, as we would talk about the returns. Congratulations. A lot of you trading altcoins, no problem, guys. Show us those returns in the back. If you're trading altcoins, I know some of you VIP are sitting back there and like, well, London trades Bitcoin. I do, and we traded a lot of altcoins. We've had $1 million days with certain altcoins. $1 million days with certain altcoins. So go ahead and add it in the back. If you're trading altcoins, show us what you got. We're excited about that. All the charts in the back, very impressive. Excited to see you all developing. In terms of the formation, you see the specifics on the screen. You see why we call it a bell formation. Let me get rid of all the noise on the chart. Let's do this. Let's get rid of all the noise so you all can focus on exactly what this pattern is. I'm bringing it up because it is the highest. Literally the highest, guys, probability pattern next to a diamond bottom. Believe it or not, a diamond bottom is right there, guys, right there with it in terms of probabilities. Very, very important to focus on both. Looking at the specifics, this formation here, the expansion, very simply put forward, an increase in volatility between the level of support and resistance to the downside. We had that as a breakout to the upside along the level of resistance. You see why we call it a bell? In VIP, we rock the bells. Boom, to the upside is what we do. If you're just tuning in, go ahead and hit the like button. If you're new to the channel, hey, welcome, guys. In terms of this move to the upside, this frustrated. It didn't look like a beautiful flag. You're seeing this on a lot of your alts. You're seeing this on Bitcoin. As we would formulate this, we're looking for a descending line of resistance and a descending line of support. There we go, guys. That's why we call it that bell formation. This had a bit of a blow off top. Different time frames. We could formulate this into a bull flag, no problem. But I want you to be aware of what the exchanges are making you trade. You have to be aware. You see this bell formation, and it's a momentum trade. It's the momentum of the buyers as they continue to pick up in a descending level of support, right? With a descending level of resistance, the buyers are not giving up in these patterns, right? But we're always prepared. I want to caution you as you continue to trade these. We are always prepared. Shout out to all the VIP. Hope you're having a great, guys. Are we midweek yet? Where are we at in the week? I think we're midweek. We're at hump day, guys. It's Wednesday. That's a good thing, right? I know we're looking forward to the weekend already. Now, as you would look at this bell formation, I just want to make sure that you're always prepared to operate along the level of support without a doubt. These are money makers. 70+% of the time they break out which direction, guys? To the upside. 70% of the time they're going to break out to the upside. So pay attention to them. It was the key focal, as you would look at this, it was the key focal in terms of breaking out of the pattern that I identified really before. You guys know that, before the pattern came about. I told you guys it's going to catch most likely into a bull flag. Boom. You guys know that, right? It's very nicely done. Exciting that you guys are a part of the group and understand the dynamics. Why? Why does this catch in the form of a bull flag? Guys, the people who want the quick, easy answer, they are rarely going to wind up first in line. You guys know that in terms of profits, they're not going to be first in line in terms of the market handing out profits. The easy answer crowd, it's not going to go like that. We like to dig into the fundamentals. I literally keep, guys, just so you know, the technical analysis, okay, book here, always for reference so I can share a page if it need be. Right? Looking at like MACD, what is that? If we have a question, I can always point you guys to the specific page. Earlier on was looking at that 15-minute time frame. It's been tricky, hasn't it? The 15-minute time frame. I brought that up earlier to the VIP. You guys can read about that, 252, okay? On page 252, you can take a look at that. We've had some divergences on that 15-minute. I've been trying to assess whether or not it's going to affect this specific move towards the top right now. We'll go through some details, but yes, I wanted to point out that we are prepared always. It doesn't mean that we're not involved, and that's the trick as I talk about capital allocation. Level of support. Being prepared to operate along a lower level of support is hugely important at all times. If you're long, right? Yeah, of course, if you're short, being prepared to operate at lower levels as from a short standpoint would be being prepared to potentially take profits. You guys know, before a kickback or a pullback to the upside. Our indicator, let's go through the details just a bit in terms of our indicator because it has performed beautifully. You guys know what happened on Doge today? Boom, guys, beautiful pickup. And I brought it in the back. We were on the green buy line. It was a phenomenal hit on the green buy line. Look at this green buy line hit. Bam, to the upside. Was that an 8% hit, guys? A 6, 7, 8% hit? Oh, over an 8% hit. Overall maxed if you had gotten it just below that green buy line. Always looking for value is a good idea, but those are big moves. You all know this in VIP. Those are big moves. Nice to see, guys, fire and ice, our indicator. Nice to see that indicator working well. Congratulations to all the VIP who are trading. Now, in terms of where we're at, I did encourage you last night to let some profits run. Without a doubt. I told you we had competing patterns, and I told you we'd have a likelihood. Let's dig into the details. Let's get past this bell formation. I assume you guys got the rock the bell. You know, you guys got it, right? You guys got the rock the bell. Guys, what it is, the momentum, the swinging back and forth, those repeat patterns that have been the key to trading Bitcoin. It's not like we should not talk about them, guys. We have to talk about them. We get to talk about them. They're very well done. In terms of the market, our participation, we're excited about it in 2022. Now, and we'll be finishing up the studio, doing some work, additional work. We'll be getting a 4K. Guys, we have the equipment, the soundboards, everything. It's just getting the pieces of equipment in is not easy, so that you know in VIP. We're receiving the 4K board right now for the video. And the ones that were recommended to us, it's like it was available, it's now, you can have it now. It's like, well, it's not really what we want. We need to push 4K. So we'll be dealing with that. We'll be upgrading here. Next couple of days, it's just been difficult with the Chinese shutdowns, everything else. Some of the equipment is not readily accessible. So we're excited to be making that upgrade here in the next 24, 48 hours for you guys. You'll be pushing 4K on those beautiful big screen TVs. All right, guys, so appreciate your patience during that process. Now, as we look at this specific chart, I like this chart a lot. You know I like this chart. In terms of those competing patterns, what we went through last night, let's dig into the hourly. Let's look at the hourly. It's just beautifully well scripted. Let me go ahead and make this screen a little bit larger, this chart a little bit larger. And I hope you're all having a wonderful day. I have to tell you that honestly. I hope you're having a great day. You're VIP. What's up, guys? That's the way to be. In terms of the fourth quarter, I can briefly touch on something that I spoke about importantly with a VIP, someone who's very important to me in terms of their trading, right? today, and I spoke about the opportunity for us to participate in a bull flag. What did we get today from Jerome Powell? A little bit of a soft walk talk. Huh? They're not done cracking out the knuckles, right? But a little bit of a softer walk talk that we got from Jerome Powell of the Fed today. And in terms of that, it is notable that in the context of even the FTX fallout, I appreciate this, and I want you all to appreciate this. In the context of the FTX fallout, we have the privilege. We have the ability to still participate in, let's say, the bull flag, right? Even amidst, and that's part of that soft walk and talk that Powell's kind of shifting over to a little bit. He's still got his hands on the throttle, guys. Hands on the trigger, really, in terms of the market. Can't let things get too hot. He's got to make things pull back. But as we talk about that shift, I won't use the word pivot, but as we talk about that shift, that softer walk that the Fed is taking, it has allowed us to participate in a very natural-looking micro bull flag. That's very nice. In the context of the fallout of the FTX situation, appreciate the fact that you as a trader right now, putting things into context, that we've had the ability to participate in some really strongly formulated bullish patterns. Textbook bullish pattern, right? And it's been really a 1-2-3 combo. This specific, if we look back on the micro here, you'll remind yourselves, hope you guys are having a good midweek. If you're working, guys, I just encourage you to finish the week up well, right? If your job depends on your energy and your success and finances depend on your energy, which most of yours do, guys, go get them. Huh? You got a few days left here. Just go kill it. Go do well, guys. We look forward to you doing well the rest of this week, and we'll have another VIP weekend. Looking at this specific bull pennant, this bull pennant mid-level here gave me a lot of confidence. I'm going to tell you guys, in the overall residual that moved to the upside, symmetrical consolidation. It was beautifully structured with a fan reversal to the upside here. And this specific pattern, because it was so perfectly laid out, I want to tell you, gave me additional confidence as we continue to go forward that something's happening. Like, okay, the Fed is coming around the corner, at least to talk, right? The softer talk that Jerome Powell had today. But as we were to look at that and put this into context, a perfect micro bull pennant means something to the market. It just does. So when you see a perfect pattern play out, make sure that you pay attention. Register it. That was a perfect pattern. I'm going to pay attention. A perfect bullish pattern. We're going to pay attention. Looking at the next level that was in play was really another perfect macro instead of that micro bull pennant. That move, solid move to the upside, and that's a key trigger. Anytime you see a real solid move, if you get a kind of a wake-up call there saying, hey, by the way, we're going to throw in a perfect bullish pattern, we pay attention. It gave me the confidence to really tell you guys that the fallout for this larger bull pennant would be the bull flag. Okay, I want you to understand the rationale and the reasoning. It's very important as we talk. Just guys, number one trade group, and we mean it. And I want you guys to assimilate to the information. I know that you do, and I want you to just appreciate what goes into some of these moves, because you next time you see a perfect head and shoulders, make sure that you note that. Okay, when you see a perfectly structured head and shoulders on the micro, pay attention to it. See how it plays out or affects or doesn't affect the rest of the market. See if the market is forecasting with perfect technicals, right? Just out of the book, perfectly scripted technicals. Make sure that you pay attention to the level of conformance and the patterns that you're seeing. And this was just a beautiful move for us. You guys know that in terms of that ball out to the bull flag and move to the upside. Now measuring this move, I let the VIP and I always check in with them beforehand, before anything goes public. And I have to tell you a goal that we have as we look at the full completion of this bull flag, that move to the upside, this specific downward sloping channel. Yes, we measure the downward sloping channel typically from the bottom of the channel. Okay, we take that flag pole, right? We bring that to the bottom of the flag, boom, channel, and bam, we've reached the target to the upside on the hourly now. That's the hourly. We spent a little more time up there. The hourly, the 30 minutes, several time frames. We are now, I'm going to say, pushing right at that threshold and up over several moving averages. Let me tell you one thing that hasn't broken, okay? The hourly, VIP, you know this, the hourly 20 moving average on the Bollinger Bands, we have not set a candle below. That was a threshold along this way up here. You guys know that. I was like, are we going to set a candle below? We pushed through a bit on a few candle sets, on a series of 2 candle sets on the hourly, but we didn't capitulate the 20 moving average on the Bollinger Band. Important for me, all right? in terms of just giving that signal towards the traders. And I know the traders are watching, and you guys know they're watching that hourly 20 moving average right now. That's out of the New York Institute of Finance, just so that you know. The notion that a crossover or under that 20 moving average is going to indicate a target to the upside or target to the downside on Bollinger Bands. You may not use them much, but that's a targeting, easy target practice, guys. That's very easy. Like point and shoot, bam, that's what it is. In terms of what is the strategy, that's the easy part about it. Cross over the 20 on a time frame and look for the top band if you're crossing over. Cross under the 20 moving average on another time frame or the same time frame and look for that bottom band to be hit. Those are the targets. We always back test to see whether or not traders are respecting that time frame. Some time frames are miserable on that strategy. Other time frames are beautiful on that time frame. So digging into the details, let's rewind here a bit as I talk about some of the psychology involved, and really it's the technical psychology that's delivered. You have to say it's delivered. It's the market psychology being delivered to the traders who are heavily technical, right? As we would consider the elements of, let's say, technical interpretation and our understanding of the direction of the market, it becomes very psychological. Just like a whipsaw will have an effect on you, right, in terms of an aberrant or an aggressive move against your position or the majority of the market. You know that, right? So as we talk about it, it's a nice group to be able to do that. And shout out to anyone who's watching this tomorrow. I know Liam over in Scotland and some other guys overseas wake up and you're like, hey, we got some content. That's a good thing. Just for you guys, just for us, it's nice. Looking at the level of resistance here, this was a nice move, okay, in terms of that specific ascending triangulation and the preceding level of support, right? We looked at this last night and I did say expect, definitely, guys, in terms of that, any pre-existing level of flat top resistance, just know that there are orders there. It's common. We commonly see that. A return to the prior flat top resistance to confirm as support to move up. It didn't get too aggressive to really power down through. You had the lines. This was what was nice. You had the actual line chart on the hourly, which is going to be more compressed than your candle wicks. Or guys, the larger your time frame, you're going to have more consolidated price action. Okay, meaning there's going to be less volatility demonstrated in your chart. So looking at the hourly, you really didn't even make it to that level of resistance, but going to your candle wicks, you see, boom, right into that line on the hourly. Very nicely done in a trajectory to the upside. Again, how did we make it? How did we get that indication that, hey, we have a 70% chance of going up? 70% chance of going up. I'm going to tell you guys, you take me to a golf course, you guys know this, you take me to a golf course, you put a guy on the tee on par three, meaning you have 3 shots to try and make it, but you could make a hole in one. If you tell me the shooter has a 70% chance, and it's an brand new club, automated robot system that's going to hit the thing into the hole, and there's a 75%, let's say a 72% chance of it going in. Okay, ask me that at a par 3 for a hole in one. Tell me there's a 72 to 75% chance of it going in the hole. Ask me if I want to bet against it. No one's going to want to bet against it, guys. It's not. Maybe you get into, what's the payoff? Yeah, a good trader would say, well, what's the payoff? Right? You immediately would gauge in, what would the payoff be if that were my probability, what would my payoff be? But looking at that, beautifully well done, bam, into the specifics. We can go into that specific bell formation. We rock the bells. You guys see why we say this. We rock the bells. You had a flag there indicated as well, but we had that white space in this zone, in that top level zone here. Boom, a little bit of white space, right? So it's kind of an uncomfortable flag, and this was just really digging into the traders, like you're paying attention to these bells, right? We gave you one here at the bottom. We gave you a micro one here before the breakout. Yep, and we gave you another one here. Everybody's like, rock the bells, VIP style. What's up, guys? Hey, we get to say it. I'm going to tell you, we get to say it because these, as a flag, it's got a few issues, right? It's not perfectly formed out. We would look at that flag a couple times, whereas the bell, we're ready to rock it. Now, the throwbacks have not been consistent. They've been very inconsistent. If you've been shorting Bitcoin, you've been getting hurt. I've tried to stay away from bearish commentary. I just have. Okay, it's a little bit, guys. It is a little bit cutting against the grain of hopefully a transitional market. And I don't want to change anything about where we're at or the severity of the market just because we're up. I don't want to do that, right? I try and always stay centered and focused. Had a good discussion today with an important trader. Okay, guys. In terms of the notion that the big guys right now are ready for another FTX. You guys know that big money is ready for another FTX, without a doubt. I promise you guys. You know that. They're prepared. It's like hit you. What was it? Fooled you once, Luna. Right? Fooled me twice. I'm almost out the door. Right, with FTX. You guys know this, and they're prepared because they've seen accelerated technologies and risk, high risk on technology developmental cycles before and markets before. So it's nothing new. An abandoned ship call hasn't been put out, in my opinion. And I have spoken to no one. I have only listened to Bloomberg 24/7 to the extent possible, so that you guys know the opinions expressed are not financial advice. They're just literally because I've worked around some big heavy money in the past. Honestly, I've worked around a lot of guys who have handled big heavy money in the past. Not to affect your trades, but heavy money right now is prepared with some exposure to the upside. Yeah, absolutely. But is definitely prepared for any additional. I mean, is there going to be another shot heard around the world? We have Luna, we have FTX. Like, if there's another one, guess what? We're ready for it. We've got the fallout provisions in place, and you guys know. Just so that we talk about it now, and it's not a popular thing to talk about while you're up, but it's the best time to talk about it. Okay, the best time to talk about a lower target is really when you're up. It's rarely when you're heading down, right? And you can solidify through the issues, but a lot of times you'll get into this mentality where people will jump on board with the momentum. You don't necessarily want to do that, right? You want to buy low, sell high. You understand the dynamic of when things start to go a direction. Oh, everything's going down to nothing. When it, just bottom line, you know that, right? When it starts to go up, oh, everything's going up to infinity. It's like, well, sometimes when it's high, the best thing to do is talk about, well, it'd be nice down there as well, which is what we did. Talking about those heavy cash reserves up around 60, you guys, up through the 60s. I had heavy discussions, you guys know this, with individuals in this zone here, right? In this zone here, about what were the 3 levels of Bitcoin. And Luke knows this. Shout out to Luke. What's up, my man? But multiple conversations. There are 3 levels of Bitcoin: the 45,000, 30,000, and 15,000 in this zone, right? And be prepared with 10 times the amount of capital at each of those levels. Literally screaming up through the roof here in terms of price action and letting people know heavy cash reserves. Guys, you can say, well, that's no big deal. Anyone could have said that, I guess, but I'm talking, to some individuals who have $500 million in exposure. Yeah, my credibility's on the line. That's a big deal, and they know that I said that, and they know they're well aware, in terms of that. So it is the channel, guys. It is what we're doing. So as I'll look into the details here, what we'll say is this specific flat top resistance along the bottom is a key focal for me. Just in general, I want you to appreciate that we just returned, guys. We just returned to a flat top resistance. This is on the weekly time frame, without a doubt. This is on the weekly time frame. Bam, flat top resistance, ascending line of support. All right, we just returned to a flat top resistance on the lower time frame. So as we would look at this issue right now on the weekly, you can see we took quite a departure from the return. Let's just look at that one more time. Look how far we departed from that specific ascending triangulation on the weekly. What's the lesson? Throwbacks, when it's time, guys, it's time, right? When it's time, and you can get hung up in the bull cycle. When the trend shifts, you've got to be prepared. And I always say this, you guys know it, the probabilities are 99-1, literally 99% in your favor. What becomes inevitable? That one. And sometimes that one can cost you the entirety of the move. So we're always, guys, you guys know how we work, and I know how you trade. We're very, very open to catching a new direction in the, I'd say in the price action of the trend, without forgetting that notion that the 99-1 is great, but what becomes inevitable? That one. Absolutely, guys. The one will work against you. Make sure that you're not exposed at a critical level. If you find exceedingly great, like on these specific patterns that are trading 70% positive to the upside, make sure that you are not involved at an overly critical or even critical level to where that, well, if it's 70-30, We're going to make money, right? Sure, but that 30%, we don't need it to hurt. It still can't hurt. Even if you were to go back to back to back trades that was supposed to be a 70% trade, you got to be able to not be affected. You got to be able to schedule back in to that next solid 70% trade. And you guys know who I'm talking to. You guys, right? That's a big, big deal. That's a huge deal. So looking at that return to the flat top resistance, I wanted to put it into context of the lower prices and that ascending line of support. We do have an upside target, which is nice. We have an upside target. I want to look at that 15 minute here. We have a bit of frustration in some levels here to the left. You guys know those pivots, right? We need to clear those pivots, but we do have an active target. And I'm going to say amidst these specific hurdles that need to be covered, we have an absolute 100% upside target of real close. Just you call it 18, guys, 17.9, depending upon which time frame, 17.9, 950 to about 18.1, right? So call it 18,000. We have that as a target. You also know, in addition to these competing patterns that we have, and guys, I'm going to just say the competing pattern is going to be a justification if we were to, because we're set up in the framework of a bearish pattern. You guys know that we're set up in the framework of that descending triangulation. And what does that mean? I'm going to just say we're in the midst of you guys know this, we're in the midst of a situation with crypto where we could encounter some more tragedy with FTX or otherwise. So this is the setup literally to excuse at any point in time a massive shock, guys, a shock wave and tsunami, boom, and everything goes to the downside. Pay attention to that notion. That's a big deal to understand. It's like we're on the cusp of, and you guys know, you understand the dynamics involved with the fundamentals. And as we would discuss such, I want you to understand as a group, being VIP, I want you to understand it's like, okay, so we're set up in a trajectory. We have some competing patterns, without a doubt. We have the notion here that we're trying to participate with some positive news potentially out of the markets, such as the Powell speech, right? Such as a more favorable, let's say, conditions for risk on assets. So as we would look at that, you saw some positive pushing, let's say, into the market today. By some directional positivity, I'll say that, in terms of equities. You saw that today, kind of that nice reaction to Powell. What I'll say is, do understand that we are in the framework, though, of a difficulty. This is a great time, as we talked about yesterday, to let your profits run, right? I'm going to say, I said that last night. Tonight, I'm going to say, if you followed the guideline yesterday, and in terms of a guideline, it's not mine, it's New York Institute of Finance, but let those profits run. The important thing is the ability to operate at lower levels at all times. You guys know that. So if you're in a situation where the house money can run, right? In terms of that, let's say, you've made cash. You are in the profit to the extent you could let your profits run. It's not even letting your own principal amount run. What if you just let the profits run? Some of those profits, there you go, just feed those out and let those run. If you're looking for a big slam dunk trade, things become a little different. I'm not gonna wind down the guys looking for the big slam dunk trade, because if you do it correctly and you try and get the slam dunk trade 50 to 100 to 150 to 200 times, one of those times you're going to break the backboard. Boom. It's going to be the Shaquille O'Neal or LeBron James. Literally, it'll be that if you're consistently going for that. So I'm not going to talk or walk you guys down if you're going for the slam dunk trade. I'm just not. It's really useless. You guys know that. The ones who are going for the big trades, it's like you're going to go for the heavy position. You want it to run. You want to create those huge profits, and the only way to do that is you've got solid iron-fisted hands. You just do, bottom line. So that's a different scenario than someone who's actively day trading. You're in, you're out, for instance, and it was just beautifully stated last night, guys, amidst this stream here, looking at the increased volatility. Here, the breakout pattern, that bell formation, that descending wedge, that secondary one here, and we just said last night, let's look for that next pattern. Who caught it in the back? We caught it in the back. Way to go, guys. Way to go. That's beautifully well done. I think that we have caught, you guys tell me, I think we've caught every pattern in the back. Whether or not you chose to trade it, guys, they weren't all bullish or in line with probabilities. Most of them were in line with probabilities to the upside. But as I count the number, just honestly, as I count the number, 1, 2, 3, 4, 5, 6 solid trades in the last week for cash. So you guys, I really hope you're doing well. If you're not doing well and you're just starting trading, my absolute hope, I would say a requirement if I could somehow snap my fingers and just make it happen. But if you're not doing well, the trick is to make sure you're not doing well at a really, really light level, okay? Almost to where it's a statistic. Literally, guys, literally, listen to me. If you're doing well, that means you've trained and geared up and you can trade, right? If you're not doing well, there's no use in not doing well at a larger amount of money. I'm telling you, if you haven't mastered that consistency yet, listen up, guys. If you haven't mastered the consistency yet, meaning I can sit down anytime I want to, I can book. You can book 4 positive trades. You've built up the repertoire, the volume, the number of trades. If you're not there yet, if you can't stack quarters into $1, don't try and stack $2,500 into $10,000 or $250,000 into $1 million. Same principles going to apply between the quarter, literal quarter, and the $250,000. If you can stack the quarters and stack the $2,500 and the $250,000, guys, it's gonna come naturally. So this is my statement to you. If you're doing well, way to hit it, guys. And I know some VIP that are doing very well. Some of them have been around for a while and have been doing very well in VIP. You know that. Shout out to Venus, doing very, very well. Shout out to Leon. We saw a 10x on a short on Doge. Very, very nicely done. So that is my hope for you, is that if you're doing well, congratulations, bottom line. If you're not doing well, I want to make sure that it's at a light level, okay? Maybe you've been convicted to short. It hasn't worked out. Maybe you're not seeing the patterns or identifying them, right? Or you guys, it could be anything. You're distracted. Whatever the situation is, that volume and repetition will allow you to clarify your needs in the market to participate at a high level, and a high in terms of just being functional, being profitable. That's the goal of VIP, as we build $1 million traders, and that's what we do. It's what we're going to be doing a lot of in 2023. This way, we're going to take it by storm. We're looking forward to building $1 million traders in 2023. That's the bottom line. We have this upside target. I, of course, would like another, just like last night, another micro solution here up top to really give us something to potentially hammer into, right? This was a hammer in trade. This was nice. We caught this drop out with a predefined level of support. It came down perfectly in the back. Beautifully well done. Nice opportunity to trade. We will always want to catch these on the level of support. And I'll just shout out to all the VIP guys. Wanted to come to you, express, guys, competing patterns, yes, but throw a 70% trade in there. We're ready to roll with it. That bell formation came in loud and proud. And what else? Capital management. I said that we would talk about capital management a bit. I would go to your 4-hourly chart, bottom line, throw on your indicator, which has been beautifully, I'd say operating beautifully. The specific buy line here, you guys remember that 4-hourly pushed a few times. It gave a few 2% trades herein until we got back down to at least this level of support. And if you look on the candle wicks here on the macro, yeah, we did touch back down just about level to that pre-existing candle wick, right? So we hit with some good volatility down into the 4-hourly buy line, right? A few different times, but there were 2% moves on each of those hits, right? Those are big trades, guys. Those are double your money kind of trades. Those were nice. And anytime that we have an indicated potential lower line, or like this, and you'll find it on a different time frame, by the way. But as you would look at that, it was the third hit into that specific, green buy line on the 4-hourly, coupled with, if you'll recall, that 5 minute, the bell formation that we found. Looking at those dynamics, if you accumulated in this bottom line zone, and remember, we always talk about here at VIP, we always talk about the difference between getting a low and getting the low. Any type of potential descending triangulation, if you could grab one, you want the low. So if you're still in that position, congratulations. And I just tell you guys, it's a pleasure to give you the fire and ice. To the extent that it's a capital management tool, I'm going to let you review on your own time, New York Institute of Finance. I want you to see how you could use fire and ice to structure in some potential downside capital reserves, both on, let's say, the 4-hourly time frame, then expand Okay, then expand to, let's say, the 8 hourly. Let's look at the daily. Would you be prepared? Do you have cash reserves right now? Do you have cash reserves for $12,580? The green byline on the daily. Great question. For $12,500, do you have cash reserves to participate at that lower level? Do you have cash reserves to the fire sale line at $8,300? Do you have capital reserves, right? As soon as you say we're in a 90% probability pattern on the hourly chart, we don't need to look at that. We're most likely going up. As soon as we would say something like that, boom, we get another FTX, we get another Luna, we get another. I just took a break from the trade station, and then when I came back, everything was gone, right? In terms of the market just banned to the downside. So we want to always look at, from capital exposure, it's one of the best components of Fire and Ice, is that it's continually reminding you we've got a buy line down here, right? And you become more aggressive. You want to become aggressive. You get into the 5 minute. Like, I missed the move. Well, get into the 5 minute. Start trading. I say this all the time. I want to say this all the time, actually. In terms of VIP, saying this about VIP, like the sharks are down at the 5 minute and the 3 minute, right? And I say, what did I say? We said something good about. I'll bring that back up. What we said about the VIP. I was like, they are the sharks at the 3 minute or the lower time frames. So guys, just enjoy your trades at this point in time. We're going to go into the back, but do utilize it. I'm going to say this, it's a big benefit of Fire and Ice having a fire sale line. We'd like to pick up on the fire sale line. Yes, it's indicating everyone is dumping down into the market. Great, bring it. That would be us. We'll be down there, right? We caught this low on the 8 hourly. You guys know that 8 hourly played on a few different big time frames, guys, or big other markets. The Nasdaq, the Nasdaq, and one other, I'm not sure it was the S&P, caught on the 8 hourly as well. So I was prepared for it. I wanted to look at it. I brought that up in a stream. I was like, guys, it's on the 8 hourly right now. And we looked at it, and boom, it did catch on the low on a primary exchange. So when we were looking at this, I was like, we're on the 8 hourly. It was a big deal for me because I knew that those exchanges had just played on that time frame. So yes, always that heavy reserve capital. It's what distinguishes us from any other group. People don't understand heavy reserve capital. And that is the goal again. Now, if you're trading and you're not being consistent, you got to limit your capital exposure. You got to literally dial that down. You guys know you really have to dial that down. If you're trading and you're not having success, if you're not consistent yet, dial it down. Dial it down to where you can focus on your trades, not bothered by the money, and build up that ability to be consistent. Build up that, build up the discipline as well in terms of the amount you're going to involve in each trade. When I say consistency and discipline, yes, it's all the other things around you, but discipline is how much you're going to put in that next trade. Staying focused, staying laser-eyed and disciplined into how much you're going to put into the next trade. Don't be the guy, and I say this again, don't be the guy that has the brand new CBR 600 and he's got to go drive at 160 miles an hour. Every time he's on the freeway, he's got to hit the throttle. You can't do that in the market. You've got to be prepared. You have to have a plan. You have to follow the plan. So that's my goal for you guys. The ones that are following it are doing extremely well. And remember, guys, we build $1 million traders. That's the bottom line. We're going to build more. And that's going to be a big goal in 2023 as we get all the components in place and the structuring together. We're going to dig into the details in the back. Again, it's been a pleasure to stream with you guys. And let me see what we got. Live chat. Here we go. We got Venus. We got Dayton. Early stream. It is an early stream. Absolutely. And let me say, yo, guys, what's up? What's up? We're going to be doing some different things. I want to tell you guys some of my goals and plans. I don't know when this can happen. I'd like us to have screen share and the ability to kind of talk or chat with each other somehow, either on YouTube, maybe in our website at some point. The technical integration of the website is difficult to say the least. So you guys know, we're having to design the charts into the website. So we're working with the original Bybit development team. We're having difficulties even with the Bybit original development team because we have the indicator. I mean, can you imagine, right? If you were to go to the Bybit development team right now in Bybit and say, we have an indicator, we want to put it on the front page and it be interactive and you show everybody on your web page exactly how that indicator works, you can understand it could take them a moment. Okay, well, what does your indicator do? How does it work? And the first thing you'd say is, Well, unfortunately, it's computationally intensive. It takes a lot of resources in terms of computing. It's weighted averages. If you got into it, they'd be like, oh, so you understand the challenge that we've had dealing with the original Bybit development team. And we're trying to put all this we're trying to put our arms around it and get it done and deliver it to you guys, but we don't want it to be early. So there are a lot of challenges. Challenges are what we were born for, guys. So we're not new to challenges. It's just we have to make sure that team around us, in terms of that development team, is capable of stepping up at the pace we're trying to get them to step up. So that's maybe the biggest challenge that we encounter. You guys as well, high performers. It's like, can you get the people around you to really step up as quickly as you want them to, in a nice way, in a good, positive way, right? And it's not always easy. A little bit of a patterning going on here. Things get catchy when you're in micro patterning. You guys know that. We always prefer either a fire and ice if you're very well accustomed to it. I'm going to say this: if you're very well accustomed to fire and ice, let's say you're comfortable on the 3-minute time frame, no problem. I recommend that you go back into, and you may have a strategy with fire and ice that you're laddering in below on a good dig near into the fire sale line, right? And that may extend, dare I say, may extend down into, like, you may be going into like the 1 minute where you're trying to get a notification on a 1 minute fire sale. You may have some different strategies that I say it's a pro level. Why? Because on different exchanges, you won't even be able to do certain strategies at lower time frames. This spread will be too tight. Just so that you know, the spread will be too tight if you're going between the pro lines. I can't speak as to what your exchange wants to charge you on the bid and the ask on the spread. I can't do that, right? So as you're, I'm not going to require anybody to trade on any platform. That's completely up to you. We recommend you don't go the VPN around the world style, and don't make $1 million on an exchange and it be a problem, the exchange that you made the $1 million on. Okay, just between you and me. If you want to go ahead and do it, go ahead and do it. Let me know how it works out. But if you're going to make $1 million on an exchange, don't go make $1 million on an exchange and it be a problem, the exchange you're on, right? You know what I'm saying? And that specific notion, because there are some restrictions, believe it or not. We're restricted in several countries from using Bybit, for instance. However, you could have easily and wonderfully deposited into FTX. Commentary aside, as we look at the issues between exchanges, you will have to test in your lower time frames if you're really trading on fire and ice. The best hits, and you guys know this, are the ones, the 4 hours and the hourly time frame. We really appreciate fire and ice because it accommodates your higher time frames with some indications and overlap on your lower time frames. Your inside wall there, that inside pro level, is going to catch and match up with the buy lines a lot of times. You guys know this. That inside pro level, as we look at this, pay attention. This is very good stuff. This specific inside pro line, let me go ahead and hide this as well. But this purple line here, it's kind of difficult to see. If I change the background color here, let's see if I can just change the background color for 1 second here under, what is this, appearance? Let's do this. It's a long time since we've done this. Let's do half of it. Let's do all of it. There we go. Now, in terms of that, back to square one, right? First day in class. Here we go. It feels like it. But this purple line in here, right in this zone, that's going to match up with, and this is on the 4 hourly, it's going to match up with buy lines on the different lower time frames, right? So that's a huge advantage if you're on the 4 hourly and you still choose to trade those. You're hitting levels on the pro. The same goes with the hourly, just so that you know. On the hourly time frame, those pro lines will line up. They're computed to line up. Yeah, okay, we did that. It's computed to line up with those lower time frames. Very nice. Not easy to do. Took a while, right? But we have a good team as well in terms of that. We're excited about bringing you some additional features. We had some discussions today about that. And what I'll say, guys, I know that you're, if you're going for the big, huge trade, you've got a liftoff sequence. We are amidst the attempt by bulls to conquer preceding left hand. You guys know left-hand obstacles here. We're in the midst of conquering those left-hand obstacles. We do have that higher target of 18,000. Let's stick the stake in the ground on the ascending triangulation and say, bulls, you need to get us to 18,000. Bottom line, Okay, can we fail? Sure. Now here's the important issue. As we walk through VIP, as we go through, what advantage does VIP even have? What do you guys know that anyone else doesn't know? Well, we focus on a few things, don't we, guys? We focus on a few things. Let's go through this very quickly. Now, in terms of I would pay some severe attention to this, guys. In terms of the amplitude move of this ascending triangulation, what are the pros looking at right now? We're looking, guys, at the same thing they're looking at right now. If you guys are going to consider that the 100% completion, let's say the 17,800 to the 18,000, has a potential lower probability on the books of being reached. Okay, the 18,000 has a lower probability of being reached on the entirety of the situation than does the 50% mark. You guys know that, right? Bolkowski lays these percentages out beautifully well. But the question on the minds of the traders, the top traders, we'll say pro or otherwise, guys. I know some quote-unquote pro traders. They ain't going to trade for us, guys. I'm going to tell you this. They're not. They're not. So looking at that title's overused quite a bit. So when I say it, I'm talking about I'm talking about real pros, or guys who know what's going on. Looking at this full amplitude move of the ascending triangulation, there is a maximized level of involvement up through to the 50%. You guys know this. Let me drop this off. J-Mac in the house. What is going on, my man? LTC cheerleader. What's up, LTC? Nice to see you. What's up, J-Mac? What's up, my man? J-Mac. Boom. Nice to see you, brother. Nice to see you. Now, J-Mac, you study this enough. You know this. I wish I could post this chart right into the, and you guys know I wish I could post this right into the YouTube. That would be beneficial, right? Let me put the pattern guide. Let me go ahead and put this in the back so that we, when I do this process, when I go through this information, and let's see here, where's that ascending triangulation? You'll see how we utilize the information. I've gone through this a number of times. Let's go through, okay, I've just posted this in the back for VIP. You guys in the back who are new or otherwise, I just say this is what we do, is I'll post something in the back and let's go through how to use it a little bit here. Let's go through how to use it now. On an ascending triangulation, boom, I will, give you guys the probability sheet, right? Now the probability sheet, that's all, and of course there are exceptions, guys, without a doubt, but most frequently it lets us know the patterns and the direction to focus on. Yeah, you can get complicated, throw back, pull backs, you can get into it, you can do well on those as well. I mean, obviously, you guys, I have spent a lot of time with this. I pulled out resources and cut and paste and read through every single pattern, literally every pattern, and I created all of these, just so that you know that, okay? I made all of these for you guys. So when you see them made, it looks like a prepackaged, oh, well, they must have bought that and they're giving it to us. I made these from the digital copy of the book, even through the probability bam on the top of it, just so you guys have this condensed version. It's going to be in the probability visual index guide. You'll have all of that, but I want to let you guys know, yes, I did this for you guys. Okay? Because you'd have to flip through 10 and 15 or 20 pages on each pattern. I'm like, we can't do this. VIP got to be able to react quickly, right? So as we would look at the probability guide here, the breakout direction, 63% to the upside. The kicker here, as we look at this, let's look at this. The percentage, let me see if I can open in a new tab, if it'll let me do this so we can zoom in. The percentage reaching, this is nice, percentage reaching half height of the target, right? The half height of the target, meaning that amplitude, as we would, let me clear up and take fire and ice off for a touch here. Hope you guys are doing well, having a good week. It's midweek. Yeah, we're excited about having the whole studio set up. I got to tell you guys, we're going to have company. We're going to have people here. We'll do anything. It's going to be nice. It's going to be cool, guys. It's going to be a cool setup. We're just kind of waiting to get it all done. It'll be in 4K in a couple of days. We got the new switchboard. We got the sound, everything. It's going to be nice, guys. The trade control station was built to trade on. It's going to be nice. We're going to have a good time, guys. We caught all these patterns. By the way, we caught all these patterns. Every single bullish pattern along the way in the last 8 days, we caught it. You guys know that in the back? You're like, yo, what's up? You know that, right? Yes, without a doubt, we caught every pattern. This thing, you see the 15 screens behind you? I know the haters just like, oh, well, you don't need 15 screens. Like, Did you catch every pattern? You pipe down. Did you catch every pattern out there? You guys, you haters, right? We caught every one. So that's that's nice, guys. Way to go. That's VIP. You guys know that. Bitcoin spike. We got to catch the moves. Now, when we get into this level of understanding, the percentage reaching half height, upward breakout 85%. That works, huh? Reaching half height. That's 85%. We like that zone, right? So 70%, it's a 70-30 split right now, would reach, and we're right at that 50% mark. We're close, right, to that 50% mark. You guys lay that out on your desktop. It's going to depend whether or not you're on the lines, the candle wicks. You could be more aggressive, less aggressive, a little bit more conservative if you choose. But this is what we go through here for the new VIP. This is something huge to plug into. These figures on the bottom here, as we look at this, pay attention to that 85%. That is the zone that we've essentially completed right now, in line with the target from the bull flag. Boom. Nicely done, huh? Nicely done. Bam. With that confirmation that we discussed last night, beautifully well done. That's VIP, guys. That's a great job. Now, in terms of the 100%, we still have a 70% probability of getting to the upside. Hey, this is what we want. We want those 70%. We want that 85%. But you see that 70% percentage reaching full height target. Now, the only issue that we have, and it's still going to fall within the probabilities, but the only issue is that we're currently pushing up on. I say, guys, you have a 50% probability, 50-50 shot of going to 19,000. 50-50 shot. You want to break the bank, go for it. I wouldn't recommend it. But you have a 50-50 shot of putting on another 10%. All right? There's a 51% chance. Slightly probable. 51% chance of us making it to $19,000. That's good to know, guys. It's a 50-50 split. I don't like trades, a 50-50 split trade, to enter into one. But so that you understand the possibility of the 19,000 to the upside, I want you to understand where we lie in that regard. 19,000, we have a 51% chance of getting there. It's shielded, at least from what we're looking at right now. Let's just call that a shielded move, right? In terms of probability, it's not something we would enter into and just go for, right? In terms of this, we want the 70% moves. When we get to the 60%, we start to think. When we get to the 50%, we really start to back off. You guys know that. We really start to back off from those 50% moves. In terms of the initiation of the guys putting capital into a 50-50 move, it's not the way to, unless your payoff, again your payoff is structured appropriately. It can just, you can run into the trap every time. It's like, well, if it's 50-50, why does it go against me every time? Are you changing your direction? Most of the time you are, right? And you don't know a lot of times if you're a new trader, you really don't know what you're repeating. And guys, here's why I would recommend 100 rounds of 100, that's high volume trades, trading very small amounts, just 1/100th, literally 1/100th of a comfortably expendable amount of cash, right? Not that you've saved up and I'm willing to suffer a loss on what I invest. No, nothing drastic, guys. 1/100th of a comfortably expendable amount of cash, no problem. Huh? If I want to do another, let's say you go through your 100 rounds, you say, I want to do another 100 rounds. It's going to be easy. You never want capital to be a deciding factor whether or not you're progressing in your skill set in the market. You just don't. Right? You'll find, guys, the capital will start to grow, and you'll have access to some better skill sets with the capital if you preserve and if you say great, or if you reserve that capital and have the discipline to only do 1/100th. It's crucially important. The people I see that do well in the market who are new or returning, they stick to that principle, 1/100th, because I know, well, ooh, this is an exciting pattern. Well, you're going to find another exciting pattern maybe tomorrow. Maybe you find another exciting pattern next week, right? If you have that discipline, market's it's not going anywhere, guys. You know how many patterns there are here? You guys know that. How many patterns are there? How many beautiful bell formations like this expanding wedge back to back, right? You're going to find patterns. Take some time. Relax. It's not a sprint, right? So as we look at this, the 70% is us getting to 18,000. Right now, it's 70%. This specific level does need to be conquered. As you would look at what might make the difference between the 30% literally becoming active, becoming a reality, right, or not, it's going to be these preceding barriers to the left and Fortunately and unfortunately, for that probability, we could still maintain somewhat of an interesting dynamic if we were to pull back a bit into a secondary ascending triangulation. Okay, there's some other patterns that could be created as well. We're up and over that, so that to the extent it still would qualify as an ascending triangulation, it would be a bit messy. The only other thing I'm looking at, and I'm going to tell you guys as we talk through those probabilities, how to use them, that's 70% of the 18,000, along with those hurdles to be met. Right? If you got house money running on it, good, guys, good. If you got the exchange, hey, you traded up, you doing well, and you got the house money, you letting it roll. Congratulations, guys. Very, very nicely done. Let's get into this on the 30-minute, very briefly here. Let's talk about a few different lines. We have an accelerating trend line. I'd like to draw out the framework of a channel structure here. To put things into context, okay, as we put things into context, I'd like you to be aware of a flat line carry up to the level of resistance. Always be aware of such, without a doubt. And as we would look at that and put that into context, we are likely going to have an additional, let's do this, let's do from this bottom line support and carry up feature, boom. Now, to this line here, we're immediately challenging that level. Do you see that bottom line carry up here at the bottom line support? I'm on the 30-minute time frame. You guys work on your so you understand the levels in play, okay? Because this channel formation is at least immediately active, and it's coincident with, just to review the technicals, right? We'll go through the kind of the primary patterns, and we'll review the technicals there and around. All right, the technical discussion. Level of resistance across the top is coincident with this parallel carry up from support to resistance of this intermediary hitch here. Okay, that intermediary pivot here. All right, the normal mode, right? The expected mode would be a parallel carry up from support to the ultimate top side resistance. It's the same. Okay, this is the same essential feature that is in play, essentially the same dynamic in play when you create a bull flag out of a bull pennant, that parallel carry down or the parallel carry up of either resistance or support respectively. So be aware of these technicals as they're playing out. They may not be immediately relevant to the point that you need to pull the trigger on or off. They may provide a flash trade in line with your fire and ice. They may provide an excellent opportunity for you to dig in and get a flash trade. Say, well, that's a probable level of resistance. I want to hit that for 40 or 50%, right, on a trade. And as you dig into the details, just understand that the technicals you're reviewing now may come into focus very soon. The market has a way, listen up, the market has a way of demonstrating technicals to you in somewhat of a fluid manner to where they're normally not a huge, let's say, shock, right? It's normally, sometimes it will be with a fallout or something like an FTX or otherwise. Debatable, I'd say debatable. A lot of people are onto some issues with FTX, including the FDIC. You guys remember that? That was, FDIC saying, why are you telling people that they had broken the rules, telling people their funds were secured, still allowed to operate on it. Great job, FDIC. At least pointing something out for us that was appreciated. That was good. So, but back to the structure of the market, the technicals, the way that they work, the way that they flow, they blend. In terms of the transitions between, let's say, a bull and bear market, we'll see a pattern form, right? We'll have a reversal pattern that will take time to achieve itself in the market. During a time of transition or a reversal, we'll be given different technicals to look at, right? We'll be walked through a process to where the technical know-how that is immediately applicable, let's say last week, may be irrelevant now. It may be more relevant now, and you may be able to drive in, let's say, to harness or hone in on some technicals that are really developing in the market and say, okay, now I understand this concept as it's kind of been ushered into the market. So when we talk about a technical that you would say, well, I just don't see how that's relevant right now, understand the dynamics in play and understand the transitionary nature and ability of the market to incorporate in those additional technicals so that they can become more relevant, so that you can apply them in your upcoming moves, right? Or that you can watch them go by the wayside if they do become or remain, let's say, completely irrelevant. But to the extent that we're hitched here, it's clearly not irrelevant. But its need to focus on such a dynamic may increase or decrease with the flow of the market. So just understood as such. What I'll say, guys, I encourage you to let your profits run with this resistance to support hit anticipated last night. That's what we said last night. Guys, if you're letting your profits run, let's get them to, let's let the bulls do their work. Let's let the bulls do their work, okay? To the the 18,000, just shy of 18. We're going to get the exact targets in the back. We'll look at the difference between the candle wicks, right? The candle wicks are going to have a much more aggressive target on this, guys. You see that wick, boom, down into that. That's going to be a more aggressive target. It's going to be significantly more aggressive in terms of the target. Okay, to the upside, you're going to be looking at a feature of literally, you're gonna hit the 18. Okay, on the lines you're not hitting 18. All right, on the 30-minute, etc. But on the candle wicks you're at 18. So 70%, 18. That 30% is going to be honed in by these pre-existing pivots to the left. And we just need equities to cooperate a little bit. We need a strong rest of the week, in my opinion. I always like to see a confluence. We can get back on track after the FTX spill out. And December 13th? Yeah, December 13th is CPI. Looking forward to trading, guys. Hope you guys are as well. We'll be here without a doubt. And you guys, I know you'll be in the back rooms. I appreciate you being here tonight. Let me see if there's any additional questions or anything else what we got going on. No, you guys are doing it. I come just for you guys. We're really not heavily promoting and trying to get a ton new VIP until we get that website up and we're automated on the process. Just so that you know, we're excited to have Dayton, a new VIP, and Will. Right now, when we have new VIP, we're processing them. So you guys know, we're making sure they understand which books to get, the conduct rules, everything else. So this website is an automated process for us to be able to automate that function so that it's not me literally with Dayton. I don't mind at all. I like to get to know Dayton. It's great. Or Will. But as we do this process, the numbers, the bulk, the volume require an automated process. So to the extent that we're still kind of huddled up and we got a tight little team, enjoy it, guys. It's a good thing. It's a great thing, right? That's VIP, without a doubt. Not everybody can be VIP. You guys know that. Not everybody can be VIP, right? So as we look at that, guys, if you want a different picture up top, you let me know. Make sure you let me know if you want a different picture up top. We'll show you off when you have your nice trades. And we're going to put together a dynamic as well. I want to really feature you guys when you have great trades, maybe even on thumbnails, clip nails. It's something cool. I want to incorporate that because it's cool to have your picture up there. It just is. And I want to have some sort of like a, killed it in the trades and some sort of, feature in terms of that. We're going to try and automate and build into that culture of ours, right? Just celebrating when you guys do well in the market. That's what it's all about. I know Venus has been trading, Leon's been trading, J-Mac, I know you're trading, Luke, I know you're trading, Will has been trading. I know Will, brand new VIP, 19-year-old, killing it, doing very well. Remember, light exposure, 1/100th of a comfortably expendable amount of cash. Comfortably expendable. I'll take one more of those at the counter. That's no problem. Hey, I'll take one more of those. No problem. That's comfortably expendable. You decide you want another or whatever you're buying. Well, I'll take one more of those. Boom. No, hey, that's comfortably expendable. So 1/100th of a comfortably expendable amount of cash. For some people, 1/100th is 10,000. It's 100,000. It's a lot of cash, guys. So as you would look at your capital, your situation monetarily doesn't need to affect whether or not you're seriously engaged in the market. It does not. Learn to stack quarters into the dollars, and once you stack quarters into the dollars, guys, what's next? Stacking dollars into more dollars. So starting small until one day you get to the point, and guys, when I talk to somebody about stacking quarters, they may be throwing a quarter is $250,000, right? And they want to have that. You guys know they need to have that specific equation working well. They're stacking those quarters into millions of dollars. Absolutely. Same thing, stack the quarters. into a dollar. Work on that, guys. 100 rounds, light exposure, repeat trades, big time VIP. So, guys, anything else? We got the website. We got fourth quarter. We got CPI. We got just a bunch of good things going on. I want to just continue to have good energy. We have caught all the good moves here. Not guaranteed slam dunks. I've been very much of the impression recently, and you guys know I've without pushing the notion, it's been, well, a level of exposure to the upside with the ability to participate below. Without a doubt, that has served you extremely well recently, as we have been, as we've been a little bit jagged edge. This move down here was a bit severe. Those higher time frames have been, you guys know, even the 4 hourly buy line will push a bit, but you have to be prepared to operate at the fire sale line. So if you get pushed or get a quick flash trade for 1% or 2% on your 4 hourly buy line, just understand, guys, understand that it's there's no perfect fix for the market. It's good. I wouldn't say it's good if it weren't good. Guys, you have a great opportunity to continue to participate in the market with fire and ice. The golden short line was beautifully well done, I think, on Doge. Killed it. What do we hit that ice cold short on the daily on Doge? Boom. Tell me we don't have an advantage in the market. That's beautifully well done. A lot of work went into that fire and that ice level. Huh? That's nice. I know Liam got a 10x. Nicely done, Liam. Way to go. So, wanted to come to you guys and just kind of update you on the technicals. We're at a few, let's say we're at a level of expectation. Our level of expectation is 70% to 18,000. Maybe a little shy of 18, depending on whether or not you're on the lines or on the candle wicks. And Bitcoin rarely likes to be told what to do. Have you guys noticed? Without a doubt, Bitcoin just doesn't like to be told what to do. We'll sit here and say it was a 70%. She'll let you trade her patterns, without a doubt. She'll let you rock the bells all day long. As we look at the patterns that were instrumental in getting us up again today. But you guys just know this. It's like, well, Bitcoin, you're supposed to have a 70% chance now going to 18,000 based on 50 years of market research. Bitcoin's like, yeah, okay, cool. Yeah, okay, we can do that. Yeah, based on 50 years of market research. Oh, okay. She's consistent, guys. You know that. We wouldn't trade her otherwise. She's predictable. She's nice technically. And looking at that pattern formation as we talk about rocking the bells, you see this, right? That bell structure, the bell formation. What is it? It's a momentum play, boom, 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 to the upside. In VIP, we rock the bells, bam, to the upside. I tell you guys all the time, you see why. Beautiful bell rocking to the upside. This one down here, also beautiful. On the breakout, double with an included pattern within a pattern. Here, boom, micro bell to get us up out of that bull flag. We couldn't ask for much more, guys, from VIP. Way to go. Without a doubt, we couldn't ask for much more. Remember to eat well, sleep well. It is challenging 24/7, 365. In terms of the pressure on you, eat well, sleep well, and continue to invest in those relationships you knew were worth investing in before you started investing. And now that you're investing, invest in these relationships. Guys, it's London with Bitcoin.